In my last Outlook video, I gave you 3 potential ways for the correction of this impulse to play out. 2, which you would expect in a typical market, and a third, based on the specific market that we're trading. Let's take a quick look at what I said. Is it option number 3, where we not only break through the corrective channel, but through the probable expected retracement zone and a fake out before returning and making those lower expected lows? Option 3 is my primary expectation. If we fast forward, we see that price broke out of the base channel and faked out of the downtrend line just as expected before creating an impulsive move to the downside. Today, we find ourselves in a familiar situation. We have what was expected to be a corrective move, breaking out of the base channel that would typically contain a corrective move, and scaring this major downtrend line at a deep retracement of the impulsive wave it's correcting. So that puts us in a position where we can have one of 2 scenarios. The first scenario is that due to the bullish nature of this extended wave, we would expect that we are in process of completing an impulse to the upside. Now, of course, if that were to happen, that would mean that the price action that preceded this would have to be a flat, and this impulsive move to the downside was a C wave. Alternatively, due to the nature of this market, we know that corrective final actionary legs like to break out of the base channel, just as it did here and has so many times before. In this scenario, we would expect that after a deep retracement and a fake out of the downtrend line, that we would continue to the downward direction. Based on the context of the count in this market and the typical expectation of extended C waves and an upward correction, my thought is that we do turn around and continue to the downside. That doesn't mean I'm going to have a death grip on my bias, but I'm going to remain agile in my expectation, and I will flip to long bias under the right conditions. It all comes down to what happens here on the hard right edge. If this wave finishes to the upside in an impulse, as it appears to be doing already, and then comes down in a corrective manner, and we go up for a 5th wave, then I will be potentially flipping to a long bias and looking to long a retrace of that move. However, if this thing does what it's been doing, and we finish a 3-wave move to the upside and get impulsive to the downside, I will remain in my short bias, but I will definitely be taking advantage of this in either direction with the Discord this week. Let's move on to Bitcoin, but before we do, be sure to like and subscribe to the channel so you don't miss any of the weekly outlooks on Bitcoin and ES and the midweek crypto and traditional asset videos. As Hove explained last week, the long play taken from the potential 2B area, targeting the potential N for a wave C, and then maybe even a reversal short to the downside, developed into much more, and Bitcoin price decided to explode to the upside. As Hove also explained, that locks us into a scenario where this wave in play is more likely a wave 3 than a wave C, which would insinuate that we will continue on to complete an impulse to the upside, shown here. If you're one that likes to step in front of a freight train to try a short play, let me give you caution. While we do show that we have a potential resolution to the upside, in these very expansive moves, we can continue on and extend internally before retracing. In my opinion, a better play is to trade the trend until it proves you wrong. This is a trade we're tracking for the members this morning. I'll want to see some very specific conditions for entry before taking this long, but it could potentially look something like this. Now, just because we show that we have this 3 potentially ending here does not mean that we're going to go ahead and short for this level. Again, this could continue on and extend before it does return to retrace externally. When price finally decides to retrace externally, I'm going to hope and look for the potential to fill this open gap on the CME, as price usually seeks these gaps before it will continue on. We can use it as an area to build confluence for a long trade, but it'll also go ahead and resolve this open gap. Whereas if we get external to this move and then continue to the upside without filling the gap, this will remain unresolved and something that we will need to consider in the future. Just because an impulse is now the primary expectation for this move off the low, it doesn't mean that we're out of the woods on this bear market yet. There are still several potential scenarios, including ones where this plays out as an impulse, that the bear market has yet to end. And believe it or not, there's still a scenario that's well in play just in case this does not turn out as an impulse and instead is a very extended C wave. If you want a video update on that, be sure to put a like on the video and comment down below so that I can do a Thursday video update about that macro perspective and make it more of a long form lecture style video.